Welcome to Smart Stock Watch. Today is November 19th, 2025, and we're diving into IceCure Medical's latest earnings report for the 9 months ended September 30th, 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. IceCure Medical has been making waves with its innovative cryoablation technology, and this report highlights some significant developments, especially with the recent FDA Marketing Authorization.
Revenue and profitability overview. Let's start with the financials. IceCure reported a revenue of $2.1 million for the 9 months ended September 30th, 2025, which is a decrease from the previous year. John, can you walk us through these numbers?
Certainly. The revenue decline to $2.1 million from $2.4 million last year is primarily due to decreased sales in Japan and other territories. However, the gross margin stands at 30%, down from 43% last year, reflecting the challenges in maintaining profitability amidst fluctuating sales.
And what about their net loss?
The net loss was $10.8 million, slightly improved from last year's $10.8 million. This stability in net loss, despite revenue fluctuations, indicates effective cost management, particularly in research and development and sales expenses.
FDA approval and market expansion. One of the major highlights is the FDA's marketing authorization for IceCure's ProSense system. How significant is this for the company, John?
This is a landmark achievement for IceCure. The FDA approval for treating low-risk breast cancer in women aged 70 and above opens up a substantial market in the U.S. and globally. The company is poised to expand its ProSense installations significantly, which could drive future revenue growth.
What are the expectations for ProSense in the coming months?
IceCure anticipates a rollout to 30 clinical and commercial sites across the U.S., pending FDA review. This expansion, coupled with potential reimbursement improvements, positions IceCure for accelerated commercial traction.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. IceCure's operating expenses have decreased. What does this mean for their future outlook?
IceCure's operating expenses decreased to $11.5 million, reflecting reductions in R&D and sales expenses. This cost management, alongside a strong cash position of $11.8 million, supports their strategic initiatives and positions them well for future growth.
And looking ahead, what should investors keep an eye on?
Investors should watch for the commercial rollout of ProSense and the potential regulatory submission in Japan. These developments, along with the FDA's marketing authorization, could significantly enhance IceCure's market presence and financial performance.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. The adjusted EPS came in at 9.18 cents, which was below the forecast of no 5 cents. What are your thoughts on this?
The EPS miss is notable, especially since it was based on a single analyst's forecast. This discrepancy highlights the challenges IceCure faces in aligning market expectations with their financial performance. However, the strategic advancements and FDA approval could help bridge this gap in the future.